Indiabulls Housing Finance. Let's switch focus there. The asset quality deteriorated sharply in the June quarter as both gross and net NPAs nearly doubled. Loan book suffered too, losing 10% of total value. To help us understand the numbers and the steps taken in the quarter gone by in terms of recoveries and provisions, joining us now on the show is Deputy Managing Director Ashwini Hooda, Shefali Malik Johnson to take the conversation forward.
Thanks, Neeraj. So, Mr. Hooda is joining us. Sir, could you talk about the quarter gone by? And the earnings were basically weak this time around with a 24% dip in the bottom line. So, how did the business shape up and when can we expect things to turn around?
So, the business has shown a stable performance in the environment where the focus of the company has been on to enhance its liquidity position and improve its ALM because of the tough funding environment that NBFCs are witnessing. So year on year, same quarter, our AUM has come down by 10% and NI has come off 12%, which has resulted in lower profit. The company also chose to make higher provisions this quarter and increase its provisioning pool. That has also marginally impacted, and the fact that the company has invested hugely in its liquidity pool, which is now 30% of its loan book versus 15% a year back, there is a negative carry on that. So all that has impacted profitability by around 20%, but we continue to remain very constructive on the industry and the prospect that the second half of this financial year should see growth coming back, as we already see a lot of green shoots and a lot of tailwinds in our business where enough liquidity is now available in the system and the interest rates have sharply come down, thus creating a ground for NBFC growth to again start from the next quarter itself.
So your asset quality has deteriorated sharply in this particular quarter. So where is this pressure coming in from? Is it the continued pressure from the developer book?
So again, the gross NPLs, we have classified few loans, wholesale, these are typical builder corporate loans that we have classified in stage 3 in NPLs. As we have always maintained that whenever there is liquidity, the provision, we get back some of our stressed account loans or there is a recovery, we will put all those recoveries into provision pool. So last quarter was where historically Pele Royal was a large problem account which got resolved and we got 700 crore. So we have invested that into provision and have recognized some of the assets because today you cannot under Ind AS provide floating provision. So there have to be specific provisions. So we've recognized some of the assets which have a potential to become NPA going forward. So they were not NPA in the last quarter, and those assets we've made these additional provisions against. So as a result, we've seen the provision pools almost go up by 500 crore, while there is this 600 crore increase in the gross NPLs.
So what would be the quantum of the loans that you have recognized, which you just spoke about, which could be potentially stressed loans going forward?
So we have, this number is around 600 crore.
Okay, and sir, going forward, what kind of recoveries can we expect going forward for the rest of the year, basically?
So I must add that we have very good recovery track record. In last 5 years, we have recovered more than 1900 crore rupees from the almost 70% plus recovery rate against the 2700 crore of total bad loan that we categorized in last 5 years. So this is perhaps the best industry performance in terms of recoverability. And the reason why we have such a high 70-75% recovery is because of mortgage asset backing all these stressed asset, and as a result, whatever these assets that we are putting in stage 3 and making huge provisions around these, we are very hopeful that we should have a very good recovery rate in excess of 75% on these assets also.
Sir, how much were the fresh disbursements this time around? Because did it continue to remain subdued this time around as well?
So we disbursed around 7,500 crore, which was 2-3% higher than what we disbursed in the March quarter. The disbursement continued to remain muted versus 10,000-11,000 crore, which was our steady state. But we continue to do two things. One, invest more of the fundraising or the repayment that we get into the liquidity or the cash pile first. And secondly, we are rebalancing our asset book in line with our strategy to merge with the bank. So we have indicated to RBI that we will be an SME bank. So the focus of the company right now is to develop a technology platform around SME lending, just like we had created the first technology platform, first in the world technology platform around mortgage assets. And that's where we are focusing on. And SME will going forward be the focus area. Housing, of course, will remain one of the significant asset class for the company, but SME will also become equally large going forward. So that's what the company is focusing on.
So one last question. So you were talking about the approval from the Reserve Bank of India. So where does it stand at, and when are you expecting to hear from the regulator?
So we had made application in May, and it's a 3-4 month process at RBI's end. So all that whatever information has been sought is being provided regularly, and it is on track. We are fairly confident of everything progressing smoothly, though there are some elements which are trying to spread false rumor or creating negativity, which is expected as a part of corporate rivalry and market's ability to try and destabilize. Apart from that, from a process perspective, everything is going as per planned, and various regulators have written to us seeking explanation on our business and other points, which are being regularly replied to. So as we qualify all the conditions for a bank, whether it's a 10-year stellar record in the financial services of creating one of the finest affordable housing franchise, or having more than 90% of our business in financial services, or no forbearance required on SLR, CRR, which are fundamental to a banking stability. So we qualify on all parameters, and we are very hopeful that once the process is over, we should get our permissions for the merger.
All right, Mr. Hooda, thank you so much for joining us.